So I decided to open a YouTube channel. So in my YouTube channel, we are going to discuss, or we are going to see some of the Forex concept for beginner and the advanced. But for this video, I'm going to start with some of the series of beginner series to understand the Forex market. So we are going to start directly from introduction of Forex trading. But before, my YouTube channel is called Million Pips Club. Here, as you see here, Million Pips Club. And this video, we are going to start our beginner Forex trading series, where I will explain the basic concepts every trader needs to understand before entering the market. So we are going to start with introduction of Forex trading. It is simple. Okay, first we are going to see what is the Forex. Forex stands for foreign exchange market, the global financial market where currencies are bought and sold. It is the largest and the most liquid financial market in the world. Trillions of dollars traded daily. So that's the short meaning of the Forex. And those are some of the definition and some of the other concepts considering the Forex. In Forex trading, currencies are exchanged in order to profit from changes in their value relative to one another. Traders analyze the market and they predict whether a currency will increase or decrease in value compared to another currency. So keep in mind the Forex generally is about to sell or to buy a currency, a certain currency. Example of currency here, you can see that Euro USD. I can show you from the chart here that the gold, USD CAD, Audi USD, NZD USD, Euro USD, and so many others. Also, apart from that, also the Forex market operates 24 hours a day, 5 days a week, allowing traders from different parts of the world to participate at any time. That means from Monday to Friday, market is open, but on weekend market is closed. That's all. Also, there is a currency pair, as I showed before. There is the Euro USD, GBP USD, there is the STJPY, and so many others. Each currency pair contains two parts. There is a base currency and there is a quote currency, or you can say the second currency. The second currency. This is, for example, Euro is the base currency and USD is the second currency. That is simple. And here there are some examples you can see by yourself. But also we have market participants. The Forex market includes different participants who contribute to market liquidity and the price movement. Some of those participants are the central banks, the commercial banks, there are financial institutions, hedge fund, corporations, and the retail trade. This is apart from retail trade, corporation, hedge fund, financial institutions, the commercial banks, and the central banks. At large, these are the ones who drive the market. So me and you, we are retail trader. So retail trader make decision according to these hedge funds or commercial banks, because are the ones who drive the market. I think you understand. There are some concept also type of Forex analysis. To make informed trading decisions, traders rely on different methods for analyzing the market. There are three main types of Forex analysis. The first one, the technical analysis, and the second one, the fundamental analysis, and also the third one, sentiment analysis. But mostly we are going to see on. So we will see shortly on each of them. So we are going to start with technical analysis. Technical analysis focus on studying price chart and historical market movement to identify trading opportunities. Important tools used in technical analysis include the market structure, which means market structure show the overall direction of the market. Also, there are the three types of market structure. There is uptrend, downtrend, and sideways, or you can say consolidation. So market move in three directions: uptrend or bullish, downtrend or bearish, and also there's a consolidation, or you can say sideways. That means at the in sideways or consolidation, for me, this when market move in sideways, there's no entry. You don't need to buy or to sell. You need to sell or to buy when the market move upward or downward, and not otherwise. Also, there's the concept of support and resistance in technical analysis. We're going to see, which means and I'll show you in a chart directly. So there is support and resistance. This determines whether to buy or to sell in the forex market. Also, there is supply and demand zone. Also, there is the concept of liquidity. For example, supply and demand supply zone represent area where strong selling activity occur, and in support and resistance, support is a price level where buying pressure prevents the market from falling it further. So resistance is a price where the selling pressure prevents the market from rising higher. This level often acts as the important turning point in the market. And in supply and demand zone, supply zone represents an area where strong sales activity occur. So that means you can predict the market either to buy or to sell using supply and demand, supply and resistance. Support and resistance, also supply and demand zone. Also, the concept of liquidity. Liquidity refers to the area where the market where many buy or sell in your orders. Or liquidity refers to the area in the market where many buy or sell orders are concentrated. Institutional traders often target this area before moving the market in a particular direction. Also, there is a concept of Fibonacci retracement. And the concept of liquidity means to trigger either buy limit or sell limit in order the market to move. So liquidity, I can say, is like a trap. So those big institutions use before to move the market in their direction. Simple as that. Also, there is a concept of Fibonacci retracement. Fibonacci retracement is used to identify potential retracement level within a trend. Common level include 38.2, 50, and 61.8. But mostly, for myself, I consider mostly 61.8. This determine this happen. You can use Fibonacci retracement when the market break to the downside or upside and started to retrace. So you can use the Fibonacci retracement to see when the market is going to retest, is going to end the retracement before making continuation. So use Fibonacci retracement as a retracement when the market retrace or when the market pull back after break of structure, either downside or upside. Also, there is an indicator. There are some of different indicators, but for myself, I use mostly RSI indicator and not others. But there's so many of them. But for myself, I'm using RSI, Relative Strength Index. But I am not advising you to use such indicator, because when you master price action, it's enough for you to start trading. That is the part of technical analysis. But there is a fundamental analysis. Fundamental analysis focus on economic factors that influence the value of currency, important economic indicator including interest rate, inflation, gross domestic product, employment data, and so on. So this also drive in one way or another the movement of the market. But for myself, I am not relying too much on the fundamental analysis. When you master technical analysis, for myself, I say technical analysis, fundamental analysis rely on technical analysis. So if you master technical analysis, it's going to be easier for you. Even if you know nothing about fundamental analysis, you're going to trade only with technical analysis as I done before. For myself, I lay on technical analysis, not fundamental. So if you master technical analysis, it's good to go. Also, the sentiment analysis, you can see sentiment analysis shortly focus on understanding the overall psychology of the market. It examined whether trades are general, for example, bullish, bearish, and so and so. Also, the trading session. You have so many trading sessions. You have Asian session, London session, New York session, Frankfurt session, and Sydney session. But for myself, I trade mostly Asian session, London session, and New York session. No, I trade mostly New York session and the Asian session. So for you also, you can choose according to your area, according to your time zone, which session is comfortable for you to trade with. But mostly there is a high movement of the market in New York session and somewhere in Asia and London session. And also there is a time when the sessions are open, so you can see through a Forex factory in your Chrome, on your Google. You can check that. You can check that time when each session are open and they close. Also, I will share that. Also, there is another concept which is the trading style. The traders choose different trading style depending on their strategy and the time availability. First one, there is the scalping, means very short term trade lasting seconds or minutes. Also, there is the day trading. Trades are open and closed within the same day. Also, there is a swing trade. For myself, I trade mostly swing trade and somewhat day trading, but I'm not doing scalping and the others. So for myself, I rely on day trading and the swing trade, but mostly on swing trading. For myself, I do swing trading mostly. So there are swing trading. Trades are held for several days to capture medium-term movement. The position trading, long-term trading based on major market trend. Also, there is the concept of risk management. Risk management is the foundation of successful trade. Key principle include the stop loss automatically close the trade when the price reaches predetermined loss level, or when a price reaches a certain level, and take a profit the same. Just automatically close the trade when the target profit is reached. So in stop loss, when a stop target reached and take profit is the vice versa. There is the concept also of risk to reward ratio. Professional trader often use a ratio such as 1:2 or 1:3 to ensure potential profit is higher than the risk. That means when I risk $100, for example, my return should be according to yourself, maybe 1 to 3. So that means I risk $100 and my return it's going to be $300. So for myself, I use most 1 to 5 risk to reward ratio. So if I risk $100, I expect my return to be $500. That's also you can use according to your need, according to your desire, what you need, and things like that. So there is the proper lot sizing. Choose the correct trade size, helps control risk and protect cap. The first things to do is to protect what you have, is to protect your capital, not to look on return. Is to protect your capital in order to have a wrong way to go in your trading career. So you have to protect what you have, to protect your capital. Also, there's a capital protection. As I said, the most important rule in trading is to protect your trading capital. Without capital, trading cannot continue. And that is a short explanation and a short concept of Forex trader. As a beginner, you can start with those concepts. And if you need this file also, I can share to you, and you can comment PDF on this video, and I can send this PDF to you. That is simple. And also, if you like this video, you can like, you can subscribe and share to other people. And this is the series 1 of Forex trading for beginners. So I will upload series 2 and the extract